Owning a home is one thing, while renting is another. But whatever option you choose, it isn't pretty these days.
Renters now facing record high rates and looking for any sign of relief.
Canada's housing market is getting out of control, leaving families stranded in the wake of a catastrophic crisis. From Vancouver to Toronto, Canada is facing a housing nightmare, threatening the stability of its residents. The gap between high housing demand and low supply keeps growing, and this has left everyone wondering, why is Canada's housing market diving into a catastrophic abyss? And what does it mean for the future of the nation? In this video, we will dive deep into Canada's housing crisis. The Canadian housing sector is facing a crisis pushed by rising property prices, increasing household debt, and a shortage of affordable housing alternatives. Urgent government intervention is important to avoid the approaching threat of potential financial turmoil. Amidst this scenario, Canadian households have found themselves among the most heavily burdened with debt globally, an effect of the relentless surge in property values coupled with sluggish income growth. For over 20 years, borrowing money has been easy, and the rules for getting loans were not very strict. And now, there is a widespread affordability issue. This means a lot of people might not be able to afford their homes. The situation is getting scarier because the chances of the housing market crashing are getting higher. Some people believe things might get better slowly, but as the interest rates on loans go up and it becomes harder to find jobs, things could get really bad.
Inflation and interest rate hikes, being able to afford housing has been on the top of everyone's minds. Recently, the worry has been higher than ever.
What surprised us in the poll is that about 40% of Canadians are really feeling mortgage pain or rental pain. That means they're worried almost on a daily basis about the ability to afford their rent at the end of the month or their mortgage at the end of the month.
During the early 2000s, home prices in Canada started going up fast. This happened because the country made a lot of money from selling things like oil and metals, which made people richer. But it also made the Canadian dollar stronger, which made it harder to sell things to other countries because they thought Canadian commodities were too expensive. To try and balance things out, the Bank of Canada made it easier for people to borrow money during that time. The fear of having a strong currency intensified after the U.S. housing market crash in 2008, as it had a big impact on the world economy. The Bank of Canada looked at what the American Federal Reserve was doing and decided to do similar things, even though Canada's situation was not the same as the United States. People didn't see the prices of things they bought going up by much for quite some time. So the Bank of Canada didn't feel like it needed to make it tougher for people to borrow money. As a result, with the low interest rates sticking around, the prices of houses just kept on climbing. This created a lot of concern about whether people could afford to buy homes anymore. During the 2008 financial crisis in the US, the housing market went down a lot, and this happened because interest rates went up and the way people were given loans wasn't sustainable. This led to more people not being able to pay back their mortgages on time, and the value of homes dropping by a fifth. This situation became one of the worst economic problems in the history of the United States. Even though Canada is closely connected to the United States economically, the situation there wasn't as bad. When the U.S. housing market crashed, the prices of homes dropped by 20%. In Canada, the drop was smaller, only about 9.2%. This happened because in Canada, the rules for giving out loans were more careful, and the banking system was strong. In Canada, the way banks gave out mortgages was more careful. Big, strong, and varied companies were in charge, and people who made sure everything was done right kept an eye on them. This was different from what happened in the United States, where there were a lot of risky loans and people guessing about what would happen in the future. It took the United States many years to get better after the crisis, but Canada was back on track after only 2 years. For people in Canada who want to buy homes now, it's really hard because the prices are so high compared to what people earn. Last year, the difference between how much homes cost and how much money people made reached the highest it's ever been. This shows how expensive it has become to buy a house. The Bank of Canada's way of measuring if people can afford homes has also gotten a lot worse because the prices are so high and the rates for borrowing money have gone up recently. In places like Toronto and Vancouver, the prices for homes have gone up a lot. On average, it costs around $1.1 million to buy a house in Toronto and about $1.2 million in Vancouver. This means that for many young people in Canada, the idea of owning a home is something that seems almost impossible. In these cities, the cost of homes is around 9 times more than what an average family earns, which makes it hard for them to buy a place to live. But how did Canadian housing get here? Canada is the second largest country globally in terms of land area and ranks 38th in terms of population size. So, how could a country with so much space struggle to house its population? While Canada is indeed the second largest country in the world, with a relatively smaller population compared to its vast landmass, the housing challenges it faces are attributed to various factors. These include a significant concentration of the population in certain urban areas, such as Toronto and Vancouver, leading to high demand for housing in these regions, causing challenges in accommodating the needs of the population in these densely populated areas. Even though there are big cities in the US with more people packed in than Toronto, they don't have the same problem with super expensive homes. So, what's making the housing situation so tough in Canada? How did prices for homes in Canada become so incredibly high? Well, it's a mix of things. One big reason why housing in Canada has become such a problem.
I believe that we are undercounting the number of non-permanent residents in Canada by roughly 1 million.
CIBC's Deputy Chief Economist Benjamin Tall estimating official government figures on immigration are wrong. He believes 750,000 non-permanent residents, mainly international students, have overstayed their visas and are still in Canada.
Is that there aren't enough homes for all the people who want to buy them. This means there's more demand for homes than there are actual houses available. And after the financial crisis in 2008, borrowing money became cheaper, and more people started investing in homes, which made this problem even worse. Compared to other big and wealthy countries, Canada has the least number of homes available for each person. It's part of a group called the G7 nations. Canada is supposed to have 5.8 million new homes by the year 2030, but it looks like they might only manage to build around 2.5 times fewer homes than that. Another reason for the housing challenges in Canada is the absence of a required correction in the housing market after the 2008 financial crisis. Following the 2008 financial crisis, many experts anticipated a correction in the Canadian housing market, which would have involved a decrease in the rapidly rising housing prices to more sustainable levels. However, this correction did not occur as expected, leading to a prolonged period of inflated housing prices. The absence of a necessary correction prevented the market from stabilizing and adjusting to a more balanced and sustainable level, contributing further to the current housing challenges in Canada. Bureaucratic red tape has significantly complicated the process of constructing houses in Canada. Lengthy approval procedures, complex regulations, and administrative hurdles have slowed down the development of new housing projects. The difficult administrative process has not only increased the time and resources required for construction, but has also added to the overall costs, further contributing to the challenges in meeting the growing housing demand in the country. The persistently low interest rates have worsened the existing imbalance between the supply and demand for homes in Canada. These low borrowing costs have encouraged more people to seek mortgages, increasing the demand for housing. However, the limited housing supply has not been able to keep pace with this increased demand, intensifying the competition for available homes and leading to further increases in housing prices across the country. Another contributing factor to the housing challenges in Canada is the lack of skilled labor in the construction industry. The demand for new housing has increased, but the limited availability of skilled workers has led to delays in construction projects and increased construction costs. This shortage has stopped the timely completion of new housing developments, worsening the existing supply-demand gap and putting additional pressure on housing prices. The concerns around soaring home prices are indeed troubling, but the real trouble comes up when we look at the increasing debt burden for Canadian households. Currently, the amount of money owed for mortgages in Canada is nearly 140% of what people make in a year. The total debt, including everything else people owe, is 180%, which is about 50% higher than the situation in the United States before the big financial crisis in 2008. This situation increases the chances of people being forced to sell their homes, not being able to pay back what they owe, and putting a lot of pressure on the whole financial system. For many homeowners, managing mortgage payments has been tough. The ratio that shows how much of their income goes towards paying off mortgage debt in Canada has reached worrying levels. It's way higher than what Americans experienced when the housing market was at its peak. Additionally, Canadian home buyers don't have the same opportunity as Americans to get a mortgage that stays at the same interest rate for a long time, which would protect them from having to pay more if interest rates go up. Lately, the number of homeowners having a hard time paying their mortgages has gone up a lot. This happened when the interest rates for their loans got higher. Big Canadian banks have said that around 1/5 of the mortgages they gave out are now causing negative amortization. This means the payments people make aren't enough to cover the interest they owe, so the banks have to increase the total amount of the loan and make the time to pay it back longer. Also, about 1/4 of these mortgages now take more than 30 years to pay off, which is not something that lenders usually do. If the mortgage rates don't go down a lot, Canadian banks and other places that lend money will have to deal with more and more people not being able to pay their mortgages. This problem will get worse if not many people can find jobs. If the housing market in Canada crashes, people wonder if it will be as bad and take as long to fix as what happened in the United States after 2008. Looking at what happened in the US can help us understand what might happen. One big difference now is that the world's economy is in a better place, so if the Canadian dollar goes down a lot and the country sells more commodities to other places, it could help make up for people not spending as much on their own. If prices for things go up more, it might make it easier for the prices of homes to go down without hurting people as much. Still, Canada is going to have a tough time for many years if the housing bubble starts to go away. The people who make the rules for the country will have a lot of work to do because the time when everything will get tough is getting closer. If the government doesn't do much to fix things, the housing problem in Canada could turn into a big money problem for the whole country.